Are you giving enough of your tax dollars to Uncle Sam every year? Before you turn me off, this should only be a couple minutes, but I think I'll be able to help you in the years to come. A lot of people right now are doing their taxes, and there are a number of aha moments where, oh, I wish I would have done that. Oh, it's kind of late to make that change, but that would have really helped. So today I'm going to go over 4 suggestions that may help you for next year and the years to come. In this relatively brief video, I'm going to be going over gifting, whether you work part-time at all or have any earned income, being aware of your tax bracket, and also Roth IRAs or Roth conversions. Now, I can't go in depth in a lot of these. The point here is to get you thinking now so that you'll be in a really good place next year. For gifting, there are a couple of points. One, most of my clients, I think most people are generously inclined, charitably inclined, but they may not actually have a strategy. So I would suggest, one, think about what you can afford to give or gift and set that goal at the beginning of the year. It does 2 things. One, if you get a lot of solicitations, people on the phone, emails, etc., you can explain to them that we do our planning in the beginning of the year. If you'd like to be on that list, please give me your information and I'll consider you for next year. And then 2, if you're in your 70s, and especially if you're in the age where you need to take money out for your RMD, or required minimum distribution, making sure that that gifting comes from that scheduled withdrawal so that there's no tax involved. And number 2, now this doesn't apply to everybody and certainly not to most people in retirement, but I do have some retired clients who may take a part-time job for fun or for vacation money, whatever. Keep in mind that that's reportable earned income. And let's say, for example, you made $5,000 in a year. Well, you can actually then do a $5,000 IRA contribution and offset some of your tax burden. If you make considerably more than that, well, perhaps you and your spouse might be able to contribute to IRAs. That's a question to either be very careful in doing your research or working with a tax professional to get that answer. Number 3, be aware of your tax bracket. And this has to do with a couple things. One, if you're drawing money out throughout the course of the year, and let's say we're getting toward the end of the year and you're deciding whether to take care of a big expense or vacation and not sure if you should take that money out, if you know what your tax bracket is, either by your own research or with the help of a tax preparer, you'll know, does it make sense to do this now, do maybe part now, part next year, so that you can stay under that tax bracket ceiling, if you will, and not trip that next distribution all into the next higher tax bracket. And taxable income also may have to do with what you pay in Medicare. Remember, there's a 1-year look back. So it may surprise you if you had, not this past year, but the prior year when the IRS has your records and you had a really good income year based on withdrawals or earnings, and you're in that Medicare age, your Medicare premiums may go up in the present year. So if you are working with that tax bracket, it would be ideal if you had non-retirement or taxable money, whether it's in checking, savings, or a brokerage account, or Roth IRA money, so that those withdrawals may not trigger much of a taxable event. Which leads me to my final topic on Roth IRAs and conversions. Now, if you go to our YouTube channel, Schoffer & Associates on YouTube, I do have a playlist on Roth IRAs and a number of videos in there about should you convert. But the whole point here is, if you pay money now on a conversion, maybe that money in your retirement account is in a better place for not paying tax later. I can't give a blanket statement to anyone or recommendation. Again, you need to do your own research or work with somebody. But here's where it helps now while you're doing your current taxes. If you can project for the coming year how much you can actually take out before you get to that next tax bracket, maybe that's a corridor you can use to move that money into a Roth IRA, pay the taxes on that conversion, and still stay below the next tax bracket. Now, I know I threw a lot at you in a short time. I hope this helped. The whole point is to get you thinking, get you planning, so that you're not scrambling before taxes. You will have headed into the following years with a good strategy, and hopefully I saved you a few bucks.